The week began on very weak notes for the Indian stock markets, with the Sensex and the Nifty both losing ground in trade today. The Nifty ended the day around 72 points lower, while the BSE Sensex shed 262 points lower in trade today. And today's fall had largely to do with the drone attacks on the Saudi Arabian oil processing facility at Upcake. Now, this led to a spike in crude oil prices by almost 20%, and this probably had its impact across world markets, stock markets, including the Indian stock markets. Now, what happened was that on Saturday there were drone attacks by some Yemeni, claimed to be by some Yemeni militant groups, and this was on Upcake, one of the largest crude processing facilities in the world, which can process up to 7 million barrels per day. So this led to a sharp increase in crude oil prices, and as we speak, the crude oil prices are still around 9 to 10% higher. This led to a sharp fall across global markets. Now, the Indian stock markets tend to be affected and impacted by a spike in crude prices, largely because India is a net importer of crude oil, and any rise in crude oil prices leads to a sharp fall in the stock markets. So we saw a fall in the stock markets. So what led gainers today in trade was a very few stocks, including the likes of Titan and ONGC. ONGC obviously is one of the gainers if crude oil prices go up. ONGC, being a oil and exploration major, tends to benefit from a rally in crude oil prices. So it was one stock that gained along with Titan. Clearly, what stock fell were the oil marketing companies, BPCL, HPCL and Indian Oil. Remember, these companies tend to get impacted by a sharp rally in crude prices because their margins tend to contract. So HPCL, BPCL and Indian Oil, all three stocks lost ground in trade today. Among other stocks that we seen losing ground was M&M and UPL. Now, M&M has said that there will be production halts for a certain amount of days, and this led to a fall in the stock price of M&M. The rupee also was trading weak on account of the weekend issues of the drone strikes on Saudi Arabian oil processing facilities. Coming to the markets for the next few days, we anticipate that there will be volatility. At one stage, the Nifty almost lost 110 points, as much as 110 points in trade today, 100 to 110 points, but recovered to end the day only about 72 to 73 points higher. What this means is that there is buying at lower levels, and we may see that the markets continue to remain volatile, but at the same time the Nifty is finding it extremely difficult to breach that 11,100 marks convincingly. It almost goes to closer to the 11,100 marks points and comes back again near the 11,000 points on the Nifty, 11,000 points mark on the Nifty. Today it ended just a tad higher than the 11,000 points mark, and the Nifty ended at 11,003 points. It was able to hold that 11,000 points mark, but in intraday trade, of course, it fell below that crucial 11,000 points mark. So the next few days will be very interesting, but we anticipate buying to come back at lower levels, and therefore if you're looking to buy, it would be a good opportunity to buy if you see a further drop in the markets, because the markets are likely to bounce back again.